Welcome back once again to Legacy Finance. In today's episode, I'm going to be talking about one of the very important financial instruments that we can all take advantage of, and that is the subject of investments. Now, we know that this channel is all about personal finance, helping you to grow your money and also to achieve financial independence. And I'm a strong advocate of investing money. However, when you accumulate money and you put it in a bank, truth is that over time, inflation eats up the money, and the time value of the money too depreciates with time. So it is not advisable that you put money just sitting in a safe bank account. And that is where the subject of investments come in. Now the question is, where do you invest this money that you intend to invest? Out there in the money market, there are many forms of investments. Generally, all investments out there can be categorized into three types. We have the high risk investments, we have the low risk investments, and we have the medium risk investments. These are the different types of investments that are out there in the money market. Now, before you start investing in any of these, it is very important that you get the right and informed education on these things before you put your money into any of these vehicles. Let me start with the high risk investments. Now, high risk investments are investments that promise you very high interest rates of return on your investments. Some of them promise as high as 20%, 30%, 40%. Some can even promise you 100% return on your investment. Yes, it is very possible. These investments are out there. Okay. Now, some of them have physical structures where you can go and do the investment. Some of them are also online based. Now, depending on which one you are most comfortable with, you can go and subscribe to these investment schemes. However, there are certain things that I want you to note before you go about in making any investment. There are three things that I want you to take note of first. The first principle of investment is the security of your principal. The security of your principal is the first principle of investment. Now, most of these investments that promise you a very high rate of return, chances are that they may not pull through. And if they do not pull through, chances are that you will lose your principal. So why do you go in for an investment that will promise you huge returns but also has the potential of making you lose your principal in the long term? So the principle of security of your principal should be taken note of first. Now, the second thing that I want you to take note of is your ability to reclaim your principal as and when you need it. Irrespective of the type of investment you decide to go into, are you certain that you can get your principal back if you want it at the time that you want it? That's the second metric. Now, the third metric is what I call whatever investment you choose to invest in, the investment or your principal should be able to generate some interest for you. Okay, so those are the three matrices you should take note of before you go out into the money market to invest your money. Now, let's get back to the different types of investments. Now, we're on the high risk investments, and as I stated, you can see that the high risk investments, even though they have the potential to give you an interest rate of return, if you look at the other two matrices, the fact that your principal is not secured and the fact that you cannot make claims on your principal when you need it, this does not make high risk investments a very suitable investment for someone who is really serious about growing or building wealth over the long term. However, there are some people who get lucky with these investment schemes. They get into them and they are able to make returns. However, chances are that most people who make money from these schemes are always tempted to reinvest more of their money back into them. And it is in doing so that they eventually lose their monies. So to be on the safer side, I would personally not recommend that anybody invest their monies into these high-risk investments. Now, most high-risk investments operate what they call a Ponzi scheme or a pyramid scheme. Usually, they start the investments and the early investors or people who start investing early with them are able to make returns. This will entice them to also invite others to join the program. Then as soon as others begin to join, then they'll use new entrants' money to pay all existing members. But as soon as there are no more new entrants, then it means that the system will no longer be sustainable, and in which case the whole system will collapse. And that is where you go on to where their office is or the site that they operate, then you see that you cannot access anything on it. So to be on the safer side, it is better not to put your money into these investments. Now, let me give you some typical examples. There was an instance where a company that went by the name Mares Gold, yet another by the name Diamond Winners, and yet another by the name DKM. All these were investment schemes that were promising very high rates of return. However, over time, they were not sustainable because they were operating a pyramid scheme. As soon as they were not getting new entrants, it meant that they could no longer pay existing members. And that was where they had to disappear into thin air. So that is the first kind of investment and the risk associated with it. Now that is left onto you to decide whether you still want to go into high risk investments or not. Because of the interest that they produce, a lot of people are easily carried away by the interest and they are tempted to go into them. However, bear in mind that that is the risk associated with investing in high risk investments. You have a higher probability of losing your principal. And once you lose the principal, it means that you have to start all over from scratch. And imagine saving money for over a year or 2 years only to lose it to somebody that you can't even trace where the person is. This is not the best, and it's not something that will set you up for financial prosperity. Now let's talk about the medium risk investments. Now there are equally some investments out there that are lying between the high risk and the low risk, and they usually promise very good rates of return too. However, there are some underlying risks associated with these kind of investments too. So for me personally, the high risk and the medium risk, there is just very little differences between them, and it's not best to go into this kind of investments too as well. However, some people are able to manage the risk very well and they are able to make very good returns on it. If you take, for instance, cryptocurrencies are some of the investments are called medium risk, because once you buy the cryptocurrency, you owe it. You are the owner of it, and nobody can take it away from you. However, if you take it out there into the cryptocurrency market and you want to trade with it, chances are that you will lose that money in the long term. So these are medium risk investments, and people are taking advantage of them and making money out of it. Others are also going into it and they are losing a lot from it. Now, if you look at the last 5 months, cryptocurrencies have created a lot of millionaires already. Now, it is very easy to be enticed by this, but chances are that if you do not have the right knowledge and right information and you go into this market, chances are that you lose your principal in the long term. All right, now let's talk about the low risk investments, and this is what I personally will always recommend for my viewers. The low risk investments is a way of building wealth that will take time. It's building wealth over time, but eventually that is something that will set you up for financial prosperity. Consider it like planting a seed. Once you plant a seed, you have to nurture the seed, you have to water it, you have to manure it so that the seed grows over time and finally becomes a big tree where it can provide you with fruits and shade so that you can sit under it and feel very comfortable around it. Now, the low risk investments are more or less like that. They do not promise you huge returns, but eventually and over time you will get a lot of benefits out of them. And for me, they meet the 3 criteria that I listed. 1, security of your principal. 2, your ability to reclaim your investments at the time that you need it. And the third is the ability of it to earn interest for you. So the low risk investments provide all these kind of benefits, and I always recommend that you go into low risk investments because of these benefits. Now you'll be wondering, what are some of the low risk investments that you can go into? You can start with bonds. Bonds, as I've always said, they are issued by governments, and for them to fail or collapse you, then it means that the whole government system will have to fail, which I don't see happening anytime soon. So that is one of the safest form of investments that you can take advantage of. All right. So those are the different investment schemes out there, and which one you should take, that is left for you to decide for yourself. And if you have really gotten some value out of this video, which I know you did, remember to support this channel by giving this video a like, give it a thumbs up, and also to subscribe to the channel if you haven't done so. You can also decide to share this video out to your friends so that they will get to know about the different investment schemes and which one is best for them. Thank you very much for watching, and God richly bless you. Bye.